Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level of resistance. In fact, if we look here on the left, we can see that every single time that the market tested this zone, it got rejected to the downside. At the moment, the market has tested once again this exact same level, from which there is definitely the possibility to see some bearish price action being developed away from that zone. And in fact, we can see how the market has already started reacting to the level and started rejecting it to the downside. Going down on the weekly, what do we see? Well, from a weekly perspective, what we can notice is that we did have the creation of this M pattern. After the creation of the M pattern, the market completed the pattern at the neckline, and currently it is rejecting to the downside this previous weekly support, which is now turned resistance. In fact, from here, the market created this rejection to the upside. This is previous weekly support, which now that it has been broken to the downside, it is turned resistance. And in fact, the market has just tested this previous support and resistance, and currently it has already started rejecting it to the downside. So we could expect more bearish price action to be created away from this zone. Dropping down on the daily time frame, what do we have? Well, from a daily perspective, what we can notice is that, first of all, the kind of structure that the market is creating at the moment could seem a bit confusing. But if you look clearly at what is happening, you can notice that the level that is getting rejected is this previous daily support, which has been acting as support quite precisely with the market rejecting it to the upside every single time that it tested it, here again, here again, here again, here, and with the last time with this massive move to the upside. After that, the market broke below that zone, and at that point, all that previous support was turned resistance across this zone, and the market is currently respecting this level as resistance. So from a daily perspective, the structure is quite clear. Now, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Then, when the market was here, I explained all the reasons for which we could expect first this move to the upside, then a correction at a higher high, and then a rejection to the downside. And I will link in description all these previous analysis, so you can go and check them out for more free education. Even the last one, in which I explained why after this impulse and correction, we could expect first this move to the downside and then a completion higher. You find them all linked in description, so you can check them out for more free education. Now, at the moment, as I was saying, we have currently a market which is rejecting to the downside previous daily support turned resistance. In a situation like this, what we have to notice is that if you look at the patterns, you have an impulse and correction. And if you have an impulse and a correction and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse leg. And what we can see is that the Fibonacci level that the market is currently rejecting is the 0.786 of the Fibonacci taken on the daily impulse, which was also lining up with this previous support and resistance, creating a confluence of support turn resistance at this level that we could expect this market in fact to reject to the downside, and that is exactly what the market is currently doing. So in a situation like this, we could expect more bearish continuation away from this quite important resistance level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the biggest institutions in the market, what we can see here is that with the last reports, net positions have once again started to get decreased. We went from having the positive plus 195k net positioning here all the way down to 169k net positions. Thus, this shows how institutions are starting to move to the bearish side of gold. In fact, what we can notice is that the lowest amount of shorts that we had was here. Currently, shorts from an institutional perspective have been increased to 67k. We went from 63k shorts to 67k shorts on the institutional side of the market. But most importantly, a massive amount of longs are getting closed from an institutional perspective on gold, going from 266k all the way down to 237k. Now, this means that clearly institutions have been closing their longs around this area, and if you're closing a long, you're actually shorting. So this creates selling pressure into the market because an exit from a long is simply a sell order. So even though they're not precisely shorting, clearly they are closing their longs, which is creating selling pressure onto the market. So there is a possibility to see more bearish continuation. And most importantly, since they are already closing longs, there is a possibility that inside of this resistance area, they might be adding more shorts, which is something that we should see with the new report coming out. So there is definitely the possibility of seeing more bearish continuation. So how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open a trading account with them and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.